Ashna, and I'm joining you straight from Bridgeweave. Today's webinar titled A New Beginning, Staying Relevant in Current Investing Trends, promises an enlightening journey into modern investing. So, friends, we all know that in today's fast paced financial landscape, staying up to date with current investing trends is paramount. And to understand how we can stay in sync with this, we are privileged to have distinguished speakers today with us who will provide valuable insights and strategies. So, fasten your seatbelts as we embark on this educational and insightful journey together. I encourage all of you to actively engage, to ask questions in the chat box section, and to make most of this wonderful opportunity today. So, let's not delay any further. It's my pleasure to introduce our distinguished speaker, Mr. Uday Singh and Mr. Akshaya Bhargava, who will take us through the dynamics of staying ahead in the world of investing. So before I hand over the session, let me give you a brief about our speakers today. Mr. Uday Singh holds the position of Chief Business Officer at HDFC Securities. With a remarkable tenure of 18 years at HDFC Securities Limited, he has been instrumental in establishing the sales and branch business network across the nation. Mr. Singh has achieved numerous milestones during this time at the organization, leaving an indelible mark on both HSL and the broader Indian BFSI industry. Bringing a wealth of experience to the table, Mr. Singh has a total of 27 years of industry experience in the financial markets and wealth management. Before joining HDFC Securities, he held senior roles at ICICI and Xerox Corporation, USA. Mr. Singh is an alumni of the Jamanlal Bajaj Institute and IIM Ahmedabad. His diverse experience and academic background have contributed to the significant contributions in the financial industry. We welcome you today, sir.
Thank you.
Coming to Mr. Akshaya Bhargava, he is an Indian-born British entrepreneur. Since 2018, he has been the founder and executive chairman of Bridgeweave Limited, a fintech firm that uses AI models to provide institutional quality research. He has been CEO of Barclays Wealth and Investments between 2014 to 2017, also CEO and founder of InfraHedge, which was acquired by State Streets in 2013. Akshaya has served as an independent director on the boards of Wealthify, Mindtree, etc., and Avendus Wealth Management Limited. He has exposure of more than 4 decades in the financial market. We welcome you today, sir. So before taking any more time of yours, let me hand over the session to our speakers to delve further into the same. Over to you there, sir.
Yes, thank you, Ashna. And it was really generous of you with the introduction. So very good morning once again, our esteemed customers, and thank you for joining in such a large number at short notice. See, we all know that investing, and especially stock market investing, has been evolving over the years. So right from the outcry system or branch business, we are moving to digital space. We are using artificial intelligence, machine learning tools, and in this very fast pace of investing, various innovative products are taking our mind space. In fact, but one thing has not changed, that as a customer, we are always looking for where to invest my money now, how do I invest, what process, what platform to use so that we get very good return from our hard-earned money that we invest. So to help you with that, we have Mr. Bhargava. He has been, as you have witnessed in the introduction, he has been driving very large AUMs and he has held various positions. We will be briefing you a product called Equity Select today, which has been giving remarkable returns in last 1 year. So he will detail you on all these things. So other than having our branches across the country, other than having thousands of relationship managers to help you, now artificial intelligence, digital platforms, and pre-constructed, more concentrated products are giving much better return. Very soon you will witness that. So not taking more time, it's a pleasure to invite Akshay on the stage to take you through the product for today. And I'm very sure at the end of this very short and crisp presentation, you'll be very happy to witness this product and you'll be using it. So over to you, Akshay. Thank you.
Thank you so much, Uday. I really appreciate the invitation. And thank you to all of you on this webinar for joining on a Saturday morning. So a very hearty good morning to you from London. I'm going to speak for about 15, 20 minutes, maybe a little bit longer. I want to talk a little bit about, Uday has very kindly introduced Equity Select. It's a great product, doing very well. But I think what I would like to spend time on is why did we think of this product and how did we construct it and what is the methodology, what is the strategy? Because it's an investment. Hey, sometimes it will do very well. Sometimes there'll be times it won't do so well. But if you're comfortable with the strategy and if you're comfortable with how it has been built and why things happen the way they do, then at least as an investor, for me, it would give me a lot of confidence. So my purpose is really to explain the product in a little bit more detail to you. So who is Bridgeweave? We are partnered with HDFC, but we are a fintech company based in UK. We are very active in India. I'm one of the 3 founders. We have, between our senior team, we have over 200 years of experience from companies like Citigroup, Barclays, State Street, Infosys, UBS, and so on and so forth. And our whole mission is how do we use advanced technologies like AI to give a better investment experience to all our end users. And our products are only available through partners. We don't have a B2C strategy or direct to customer strategy. We only work through partners. And Equity Select is a product that is available only through HDFC Securities to give HDFC Security customers a very simple but still a very sophisticated investment product. So let me just jump right into it. Now, if you look at everyday life, whether we decide aaj kya kapda pehna hai, or any travel or any buying any equipment on Amazon or anywhere, we spend time researching it. We look at data, and then ultimately we make a decision based on what we think is the best thing. Now, if we use data and AI, look, if you go to Flipkart, they are using some AI tools inside. If you go to any airline, they are using some tools, AI tools inside. So why don't we do the same thing in investments in our life? And that is really one of the big thinking that has driven us. Now, you could say that, look, investment data has been available for 50 years. Ab kya ho gaya? What is different now? What is different now is that technology like AI is now advanced enough to do the kind of analytics even 5 years ago were not possible. There are always, the Warren Buffett School of Investing will tell you that identify good stocks like HDFC, buy them now, buy them when they are low, and then just hold on to them for a long time because they are good value stocks. And don't worry about the short run because short run is noise. Stay focused on the long term and you will do well. Nothing wrong with that. However, the only argument I would make with that statement is that short term is not noise. Value investing is clearly an opportunity in the long run. But in the short run, there are patterns that are possible to predict, especially now with technology and AI. And you should not ignore them as an investor. They should form a part of your asset allocation and how you think about it. Now, historically, it's only been hedge funds who've had the money and the technology and the high quality analytics to be able to identify these opportunities. But with AI, we want to make it available to everybody. So that's really the thinking behind it. So what is Equity Select? It's a long-term basket, and I emphasize long-term. And I stay with that. I will come back to this phrase in a little while, but it makes you money by predicting short-term price movements. Now, that sounds like a contradictory statement, but let me explain further. So basically, it's a balanced basket of value and momentum stocks. So you get 10 stocks, and these stocks are selected on their likelihood of delivering a positive short-term return. Okay, so it presents you the recommended 10 stocks. If you want to make some changes, you can do that. You're always in control. And you can just buy all 10 with one click in your HDFC Securities account. And I want to emphasize that the way to think about it, it is a long-term investment in equities that rebalances every 2 weeks. Now think about what happens in a mutual fund. You buy shares in a mutual fund and you stay invested for a long time. Now, that does not mean that the fund manager is not changing his stocks or her stocks. They are actively managing it all the time. It's just that you don't know. What we have done with technology is allowed you to be the active manager. So think of Equity Select as your personal mutual fund that is actively managed by using AI, but without any of the high fees that come with mutual funds. Okay. So the minimum amount is 1 lakh. You can put 1 lakh, but I would urge you to think of, we recommend 2 lakhs or more, because then that's when the fees start to optimize well. And a 12-month subscription is 10,000 rupees, regardless of how much you invest. 6-month plan is 5,500. You can pick anything you want. Let me talk a little bit about how the portfolio is constructed. So there are 2 parts to it. One is stock picking. The second is shortlisting the stocks that actually go into Equity Select. So we obtain data on Indian and global stocks, and then we compute about 1,000 features for every single stock. We then take these features and put them in our proprietary AI models that have been trained using about 15 years of data. And the model uses some very advanced techniques, and I'm happy to talk about them if somebody is interested, to create a shortlist of stocks. When we have the shortlist, we use that shortlist of stocks to construct the portfolio. And how is the portfolio constructed? We use very strong liquidity and volume thresholds. So if the stock doesn't have enough trading volume, then we don't recommend it. Market cap is always greater than 7,500 crores, and the stock must have good analyst coverage. And out of 10 stocks, 6 will be momentum ideas and 4 will be value ideas. So we're giving you a mix of them. And this is a portfolio of 10 stocks. And every 2 weeks, you'll get a message from us or message from your HDFC relationship manager who will tell you that rebalance is due. And then you can rebalance. So effectively, you're actively managing your own portfolio as if you were your own fund manager. Now, what makes this different? Firstly, our models are very high quality because, look, I'm sort of bragging a little bit here, but these are very good models developed by an expert team that we have, and we have used 14 years of stock market data. We then perform almost 35 million calculations every day before we present any ideas. So there's a lot of computational mathematics and analytics going on. And the proof is in the outcome. So you will see we have almost 2 years of track record of producing very, very good results. And I'll show you the results in a moment. So it is not just me talking about my product, my company, but it has proven itself to investors in the market. So let's go to performance and analysis. So this chart sort of speaks for itself, but let me explain. It starts from the end of January 2022. So little under 2 years. The lighter shaded area is Equity Select. The dark area is Nifty 500. And this chart shows that if you had invested 100 rupees in both Nifty 500 and Equity Select, Nifty would have done 118 rupees and Equity Select would have given you 196 rupees. So you would have almost doubled your money. So it has delivered this money over a long term. So I want to emphasize the long-term nature of this product. The other thing I want to point out, if you look at the line, it is not a straight line. It is on a day-to-day basis, it is quite spiky. And there are moments, like for instance, between Jan 23 and Feb 23, when there's a sharp downturn. There is between July 22, just before July 22, there is another little bit of a dip. So these dips will happen, okay? And that is why I encourage you to think of it not as a 15-day investment, but as a long-term investment. And if you hold on in the long term, you will see the results which I'm showing you here. To go a little bit more into details, here we are comparing equity select with the benchmark, which is Nifty 500, and the relative return row is the difference between equity select and the benchmark. And as you can see, whether you take 3 months, 6 months, year to date, full year 22, or since inception, which is total returns, in every single area, the portfolio has beaten the benchmark. Now, the table below is super important, and I want you to pay attention to it. Volatility, which is a measure of risk, is higher in equity select. So this is a higher risk investment than simply investing in Nifty 500 ETF, but it gives you higher returns. Okay. Maximum drawdown is a measure of peak to trough distance. And again, equity select is slightly more than the benchmark. And you should bear that in mind. What is interesting for me is Sharpe ratio. Sorry. Very simply, conceptually speaking, Sharpe ratio is return for every unit of risk. And this you can see the very stark difference because it combines returns and risk. So for 1 unit of risk, as it were, you are getting 0.85 of return in the benchmark and 2.34 of return in equity select. So the risk return reward is far better in equity select than elsewhere. It is very easy to find. Just go to the HDFC Securities website. You will see icon for basket investing. Click on basket investing. You will see a few baskets. Equity select will be right there. Sorry. If you click on equity select, you will then get all the analytics. You'll come to the analytics page. There's a wide range of tools. You can look at 1 month performance, 3 month performance, 6 months maximum period. You can look at other variables. You can look at a fact sheet about the portfolio. So it's all very easily accessible and very easily available to you. So in closing, I want to say how to get the best out of equity select. Number one, think of it as a long-term portfolio with AI-powered active rebalancing. So it's not a passive thing like an ETF. It is an actively managed portfolio, but you have the machine as your assistant helping you do that. Secondly, please give some thought to the amount you wish to invest. There is no maximum from our side. You can put any amount you want. But if you invest a very small amount, then your fees will not optimize well. So that is why we recommend at least 2 lakhs or more as your investment. Thirdly, please remember to rebalance regularly because that is really important. Because that is when the machine is making a fresh recommendation of the 10 stocks for the next fortnight, and it is really advisable that you make the rebalance that is required. And finally, I don't want to make it sound like a normal investment disclaimer, but value can go up or down during any single fortnight. So, and of course, it would be remiss of me to say that future performance is not based on past performance, but past performance is not a guarantee of future performance. Of course, it is not. But there is enough evidence that you have seen in the chart that I showed you on performance that if you rebalance regularly, the chances are this portfolio will do its really best for you. So with that, let me stop and take questions.
Over to you, Ashna. In fact, thank you, Akshaya, for being so candid about the charges, about the investment one needs to make, and about also telling that it is slightly higher risk for higher return. And our investors even understand that. So over to you, Ashna. Please see the questions in the queue.
Yes, Uday, thank you. So our chat
Yeah.
section is open. I would request all of our attendees to ask us your questions. But in the meanwhile, we do have a list of frequently asked questions, Akshay and Uday. While
Yeah.
people, they find time to write their questions. There's this one question
Right.
that is open to both of you, and we would like your view and insights on that. How do
Okay.
you both feel basket, plays a role compared to single stocks? And where do you feel the future is?
Akshay, you would like to take it up, or
Why don't you go first today?
yeah?
I'll come
No,
in.
it's your platform. I keep speaking, but my bit only on that. See, I personally believe that it is not one stock or one way of investing which gives return. So, in fact, customers believe, and we have lot many products. It is the asset allocation. So it is the method and the process, that you follow. So we have on one side individual stocks, then we have mutual funds, which has 60, 70, 80 stocks. Then we have various other, small cases available, PMAs, AIFs, and whatnot we have. But here, this kind of product, which does in-depth study of the stocks, it is concentrated into 10 stocks, which is, as Akshay explained, very, very in-depth studied and very actively managed. Because in our fast-paced world, the way things are changing, unless you rebalance, unless you are actively monitoring, maximizing the return becomes little challenging. So what say, Akshay? Over to you.
No, that is well said, Uday. Look,
Yeah.
let me go back to the notion of value investing. What is
Yeah.
value investing? That you buy good stocks and you hold them for a period of time. It never says that keep the same stocks forever.
Hmm.
So if you
Very
look at
true.
S&P 500 today or Nifty 500 today, it is full of companies that are new. Apple did not exist 30 years ago. Facebook did not exist 30 years ago, and these are stocks that are driving. Tesla did not exist even 15 years ago. So, all these stocks are driving the market big time, but there are new entrants. So there is a very strong case for actively thinking about rebalancing. Now, whether you rebalance once in 2 years, once in a year, once in 6 months, different problem. Now, the notion of a basket gives you diversification. And the stock selection based on extensive analysis and AI modeling gives you the upside potential. So what you're really doing is balancing both the upside potential and the benefit of diversification. That is what I feel as an investor I would want if I wanted to put my money on it. I don't want to get very focused on one stock. I don't want to spread myself across 100 because then you will always, the more stocks you have, the closer you will get to the index because
Very
when
true.
you're
Very true.
entering.
In
So
fact,
I want
I would
yeah,
also want to draw attention of our customers to their own job, their own business, their own industry they are into. So compared with what used to happen 10, 20 years ago, today, aren't you facing very fast change? Something new coming up every month or so, and the way you got to be alert in your own job, your own business, your own industry. That's exactly what Akshay is talking about.
yeah. So I am a very strong believer in basket investing. Now, that's why if I look at a mutual fund which has 200 stocks, I think to myself, if I'm buying 200 stocks, why don't I just buy the index and get rid of the fees also?
Sure.
So if I'm buying a very large basket, then I may as well buy the index. And buying an index is extremely low cost. What we have tried to do is to give you a concentrated index, as it were, that you can actively manage without having the same high fees that you will see in a mutual fund.
Yeah.
Well, thank you,
Ashna,
Akshay.
any more?
Yes, yeah, we have a lot of questions. I'm just bringing them one by one. So, Akshay, this question is again for you. Somebody wants to know how basket is different from mutual funds and PMS.
So in a mutual fund, it's a pooled investment of several stocks. Okay, so it is a very large basket. Think of it that way. But technically, you are not buying. You don't own the stock. Okay.
Yes.
The fund owns the stock, and the fund manager decides when and if to rebalance. In a PMS, you own the stock, but the PMS manager is doing the rebalancing based on his or her best judgment. In Equity Select, you own every stock and you are doing the rebalance. And you are deciding what to rebalance. So look, one fine day, there's some stock in the basket that you don't like. You can say exclude the stock. So you're acting like your own PMS manager, but you don't have to constantly watching, because itna time kiske paas hai. And that is where the AI and the machine comes in. We do all the monitoring, all the tracking for you, and show you the AI recommendations. And you're free to take them or not take them, or take some of them and not all of them. That is also possible. So it gives you a lot of power and control. And in so doing, it takes away a lot of the fees that come with outsourcing that you tend to see in mutual funds.
Thank you, Akshay. I think we've got a question from Raj Lakshmi. What is the benchmark considered for Equity Select?
Raj Lakshmi, benchmark is Nifty 500. Let me share my screen again, and I will show you. Yeah, so I hope you can see the slide. Our benchmark is Nifty 500, and that is what we use. And similarly, on this particular page, page 11, all the comparisons that we have done are Nifty 500.
I hope that answers your question, Raj Lakshmi. Next from Karthik, he's asking, is it available for NRIs? So Karthik, not as of now, but very, very soon we will be live. Next question from Jatin. Next question from Jatin. Will SIP work to get good returns in this basket as rebalancing is in 15 days?
Yeah. Look, it could. But again, the amount you want to invest matters because if you put, like I said, if you put very small amounts, then the impact of fees will not be great. So just do the arithmetic in conjunction with your HDFC relationship manager, and then you can make a decision. But yes, that is a possibility.
On this, I would like to say, Akshay, that one can start with 2 lakh, 5 lakh, 10 lakh as he wishes, and since it is actively managed anyways, it will try and optimize. As a customer, also you can be alert, and if you see, say, market correcting or some opportunity, because you'll have your own, so that time you can put in more. I think that should be a good way. But yes, one should enter with some sizable amount to get a sizable return, as it says.
Right. Our next question is from
a little bit, Ashna, 1 second. Yeah. See, this is about. So where is the world going? Earlier we used to send. I remember when I was growing up, our maid used to go and buy vegetables. Sometimes our mother would go and buy vegetables. Then now we have vegetables coming, groceries and all being delivered to our homes, and all we have is an app and we order. So this whole use of technology to enable many things is becoming a way of life. I think we are trying to do the same thing with investments. We are saying, why depend on a third-party fund manager or a third-party PMS manager? Technology can help you do many things yourself on your mobile phone, on your desktop, very easily. And there is no downside in terms of time, because you don't have to, stay glued to market screens all the time. That's what the AI and the machine is doing for you. Sorry, go on, Ashna.
Yes, Akshay, thank you. So there are one or two questions which I feel we can pick up. So one is a question from this is from Pankaj. He's asking if there's any lock-in and if the rebalance will be done automatically. Yes, Pankaj, there's no lock-in, and you will get intimation on rebalancing over your registered email ID, where you would need to log into your broker account and accept the rebalancing. Nothing will be automated in that way. So I hope that answers your question. Next is from Radhika. She's asking, क्या stocks account में आएंगे? Yes, and you have complete control over it. And we have a question, Akshay, to you. What is the minimum investment amount required?
Yeah, so like I had said in the slide earlier, the minimum investment amount is 1 lakh, but I recommend a minimum amount of 2 lakhs, but you can invest less, 1 lakh. Less than 1 lakh will not be possible, but 1 lakh is the minimum that you will see on your when you go to buy equity select.
Okay, we have a question from Shweta. Why should I pay fee when we have free baskets also? Please help me understand premium for it, as I'm liking the product, so need to understand more about it.
So look, there are many baskets available. You have to, what I would recommend is the way to think about it is analyze the basket. Don't just buy it just because I'm saying so or somebody is saying so. Look at the basket, look at its performance, look at performance over time, look at performance during periods of stress, market stress, and look at the risk. And risk is measured in volatility, in drawdown. Look at the Sharpe ratio, which is a risk and reward measure that combines both risk and reward, and then make your decision. And you may decide that I want to invest in 2 or 3 portfolios. See, don't, if you over index on the fees, that one is free, one is 5,000 rupees or 2, that is not the right way to look at your investment returns. I would look at the portfolio first, decide that you like the portfolio, look at the strategy, look at why it is doing what it is doing, because it is very easy to तुक्का भी लग सकता है. You can say this portfolio did very well. That is why it is important to understand the methodology and the strategy of the portfolio. If you like that, then look at the fees, and if the fees appear, if you don't like the fees, then that's your choice. But we have deliberately kept the fees to a point where we believe it is quite a competitive number. I think 10,000 rupees a year. And you can invest 5 lakhs, you can invest 50 lakhs, you can invest 1 crore. It is still 10,000 rupees. It is not an AUM-based fee like many money managers will charge you. So I would urge you to do a little bit of analysis on the portfolio. There are many tools available on the HDFC Securities website that will allow you to do a very good and a robust analysis.
Yeah, I would say on this that, as you use many products, some at a lesser cost, some at free of cost, for some product in your life, in your work, in your investing, you pay, high price. I would advise to, use this as well and see what kind of return it gives. The kind of return you can see on the screen, I'm sure it's, very exciting. So the kind of effort it goes into managing this very, very actively, I believe, it's the return or the value you get for the price you pay. So look at it from that angle as well. Thank you.
Thank you, Akshay and Uday. We have one more question, and this is to both of you. I think it's a very important question. So thank you for asking that. The question is on rebalancing, and people want to know why rebalancing is mandatory. Why should we do it?
Let me take that, Uday, if you don't mind.
Yes.
Look, you can choose not to rebalance. That's always your choice. The reason rebalancing is important is, let me go back to the methodology of this portfolio. So when I look at the stock picking section, forget the bottom 2 rows, the top 3 rows, this is the methodology we use to pick the stocks. Okay, now let me go into a little bit of detail, and I apologize if I sound a little techie and geeky and confusing, but I'll try to be as simple as possible. So what we do is we take every stock and we compute 1024 features. Why 1024? Because we convert it to a 32 by 32 matrix. So think of a square with 32 cells wide, 32 cells long. So it has 1024 cells. Each cell is a feature that we have calculated. And the objective of the model that we have built is to make a 15-day prediction. Okay, and we compute the correlation of every cell, i.e., every feature, with the objective of the model, which is delivering a positive 15-day return. If we find the correlation high, we color the cell very dark. If they find the correlation low, then it is very low. The lowest can be white, and the most dark can be black. And there are infinite shades of gray in between. So we get what is called a grayscale matrix. Okay. In the 14 years of history, we have looked at every single stock that has given a positive 15-day return. And we have looked at the grayscale matrix for that stock. And that grayscale matrix represents an image. So what we have done is we have told the machine that this kind of image represents a potential breakout. Okay. Look, it's no different than facial recognition, which are used in airports and places everywhere. If you teach a machine to recognize a white face versus a brown face, the more brown faces it sees, the better it gets at identifying those. The more white faces it sees, the better it gets at identifying a white face. Similarly, if we take that image and say this is a breakout image machine, then the more breakout images it sees, the better it gets at identifying breakout patterns. And therefore, the more data it sees every day, it actually gets better. You know? And so when we get daily data, we convert all daily data on every stock into the same 32 by 32 image. And then we do a image matching. This technology is called computer vision. It is used in self-driving cars and things like that. And that is what we use to identify today's shortlist of stocks. And then we use number of filtering techniques like neural networks and spatial ordering to rank order these stocks and then come up with a basket of 10. Okay, so this is really how the machine works, and it is quite a complex calculation. That's why we do 35 million calculations a day, but the results are, pretty spectacular. Are they consistent? Do they happen every fortnight? They don't, and they come with a little bit of risk, but the outcome is pretty fantastic. Sorry, Uday, a long answer, but if you want to
add No, I would only say that rebalancing into any strategy, any project, anything that you are trying to do, you must periodically figure out and correct your path. So this is done automatically by the machines, as Akshaya explained. So every 15 days, or if you don't want to do every 15 days, at least in 1 month or so, if you rebalance, it will properly benefit and optimize the returns, based on the machine learning. So, that can be one reason. Otherwise, you may not rebalance, as Akshaya said. But I think for the, as it is actively managed, it is advised that you must look at it.
Yeah, it is highly advisable. Not just see the objective of the model is to find 15-day stocks, 15-day stocks. Now, there's nothing stopping you from holding the stock for 1, 2 months or 3 months, but then the AI model work is you're not using. You're using your own.
Precisely.
So because if you want to make the most of the AI model, then every 15 days it gives you a fresh recommendation. It does not always result in 100% rebalance. It may, but it may be that out of 10, 4 you continue to hold and 6 you switch out. So again, I would urge you to rebalance regularly, because then you're consistent with what is being recommended. But also feel free to exercise your judgment. If you don't believe that, if you strongly believe that market is going down, you may say that I want to just stay out of the market for a while. So it gives you all the optionality, all the choices, and puts you in control.
Yeah.
So we have our next question from Ajay. Does the subscription fee go from bank account linked to HDFC Securities? Ajay, you can set your subscription amount through any bank account. So there's no limitation that ways. We have another question from Ryan, and he's asking, is the fee one time or recurring? Hamesha dena padega during investment within 1 year? So Akshay, if you want, we have an answer for it, but I would,
Yeah, look, it's 10,000 rupees subscription per year. When the year is over, then you'll have to renew a subscription. So it is not you pay one time and then you never have to pay anything again, because it's 10,000 rupees per year or 5,500 for every 6 months.
Right. So Ryan, your plan will be auto-renewed as per your subscription duration. And once you are subscribed, you can invest multiple times through Invest More. No additional fees would be required to be paid. So I think that brings us to an end. More or less, a lot of people are asking, there are a lot of questions on rebalancing, Akshay. How is this basket different from others? But I think holistically, we've covered, all those points. So if there's a line each that we can get from you, Uday sir and Akshay sir, I think that would be really helpful for all of us.
Yeah. Akshay, over to you.
So look, I have a very strong conviction that this is a good product. It has worked over time. Okay, so I don't speak as a proud father. I speak, with data and experience. Is this the only thing you should invest? No. Okay, but please consider making this an important part of your asset allocation. And you will have other investments, you'll have mutual funds, you'll have bonds, you'll have ETFs, you'll have other things also. Please, of course, do that. But this is the emerging thing. You will have some investments for the long term. You will have some investments for the short term. In the short term, machines can help you identify opportunities that have traditionally not been possible. So I think it's a very important component in your investment landscape. That's how I would encourage you to think. But please, I will just repeat, long-term investment hai, har 2 hafte rebalance hota hai, so don't forget. And stay positive, stay invested, because the machine is doing the active rebalancing for you. India is a crazy market. I mean, in a good way. I'm a very, very strong believer in India, not just because I come from India. I think every economic trend for the next 20 years, I think the next 2 decades belong to India. You cannot be not part of the India equity story. And you will have many ways to participate in that story. We are coming up with our contribution of one way that we believe is really, really effective.
Yeah. Fantastic. My bit on this, Akshay, we are in the era of robotic surgeries. We are in the era of, machines taking over so many things with much more precision, with much more, accuracy and speed, etc. So while you have your age-old wisdom, while you do based on your emotions, based on your gut feeling, etc., but to maximize return in shorter period, because this product is that you can, though it is for the long run, but rebalanced in a shorter periods to maximize return. So a good part of allocation, maybe 10%, 20% of your portfolio should be into products like this actively. And many of you are already trying to do on your own. You are trading, you are using futures and options. In fact, many of you are venturing into whatnot, Bitcoins and, Khelo India, Khelo and whatnot. So this kind of product, which is much more scientific, much more, I would say, controlled, much more robust, using machine tools and AI learnings, should be tried. And of course, your experience, the past experience is definitely there, but you will experience for yourself, and based on that, I'm sure you can take your calls. So that's what from my side. Thank you.
Thank you, sir. Thank you, Uday, sir. Thank you, Akshaya, sir. I think we couldn't have ended it better. Today's webinar has highlighted the importance of adapting to modern investing trends, and both of you have very beautifully emphasized the role of tech, AI, and data analytics in reshaping the investment landscape. So we thank you for that. I feel as investors, it's vital to stay engaged, to explore new opportunities, and embrace innovation. The financial world is constantly evolving, and our ability to adapt, I think, will define our success. Thank you, everybody, for joining us in this enlightening session. We look forward to the continued journey of discovery and learning together. Have a great day, everybody. Thank you so much.
Thank you. Thank you, Akshaya. Thank you.